Today is Mayor Bloom, who is taking the place of Council Member Schneider, who's out of town, and Council Member Falcone. We have two items on the agenda, first being a report on the investments of the city, and the second being a report on an emergency operations center at the fire department. So shall we begin with the investment report, Mr. Pearson?
Thank you, Mr. Chair, members of the committee. Bob Pearson, Finance Director, and we're here for our quarterly investment report and fiscal agent investment report for the quarter ended September 30. And as the committee knows, we've addressed, given the state of the financial markets, we have a number of times over the last 4 to 6 weeks discussed the city's investments in large measure to assure this committee and the council and the public that the city's investments are safe and secure despite the turmoil in the financial markets. And so I'm not really going to spend a lot of time speaking to that again. I think I'll pretty much stick to a normal quarterly investment report. But this, as I said, is for the quarter ended September 30. And during the quarter, the Fed Open Market Committee kept the target rate for federal funds unchanged at 2%. We know that since that time they have reduced it, and they're meeting today and tomorrow, and the consensus seems to be that the Fed will lower rates once again at the conclusion of their two-day Open Market Committee meeting. In terms of the city's investments during, the report itself gives you a look at the U.S. Treasury market yield curve for 4 consecutive quarters. I'm talking at the top of page 2 of the agenda report. And excuse me, I'm flying solo today. And as you can see, this gives you for June 30, I should say the last 4 months, June, the end of the previous quarter, and then each of the months in the current quarter, July, August, and September. And it presents it for the curve going from 3 months all the way out to the 30-year. And you can see that the cumulative change in all cases was down in the yield curve. In terms of our investment activity, you see that we had purchases during this period of time. We purchased a Federal Home Loan Bank note of $2 million, a second Federal Home Loan Bank of $2 million, and of course, as the committee and the council knows, we also purchased the airport's promissory note, 6-month promissory note for $7.8 million. We had a number of issues called, $4 million worth of paper called out during the quarter. And we also had maturities in Wells Fargo, one of the very few corporate securities we owned. And then 2 Federal Home Loan Bank notes were matured during the period of time, a total of $5 million. At June 30, the portfolio had an average yield of 4.466%, which really isn't bad given the state of the current interest rate environment. And our days to maturity did decline from the quarter end previously, June 30, from 637 days to 578 days. We did make a conscious decision to try to keep the portfolio shorter in light of the uncertainty in the financial markets. At June 30, or September 30 rather, we did have an unrealized market gain, and that is simply because of the decrease in investment yields during the market yields during the quarter, which, as you know, when yields decline, the value of your existing holdings increases because you bought them at a higher interest rate environment. We have for a number of years reported in the quarterly report the 5 securities with the largest percentage of unrealized losses. We show that table on bottom of page 3. All of the securities shown are AAA rated, and the only reason they show market losses, as you know, again, is due to the fact the change in interest rate environment from the time we bought them. The table at the top of page 4 shows, again, another way to look at the market gains and losses in the portfolio. This shows the 5 securities with a market decline of greater than 1% compared to the prior month. In other words, pieces that declined in value in the month of September based on the change in market rates. And you can see that even of those that declined, a number of them, 2 at least, were still showing a market gain, but less of a market gain than they had at the end of August. At September 30, we had investment activity. This is now on the investment report. We had total purchases and deposits of some $15.4 million, the bulk of which were deposits to the state of California's local agency investment fund. We had LAIF withdrawals, sales, maturities, and calls totaling $15.9 million. So the total activity for September was a decline in our investment balance of about $500,000. And again, at September 30, total cash and investments of the city was $158.4 million, which was just slightly less, about $1 million less than at August 31st. As we do for quarter end, we also included in this report a report on the city's fiscal agent investments. And as a reminder, fiscal agent investments are primarily bond proceeds, which are held on behalf of the city by a trustee bank. And the bulk of them you can see on the last page of the investment report are bond funds, both reserve funds and remaining, particularly redevelopment agency bond project funds remaining. And all of those, as I said, are held by independent fiscal agent banks, either Bank of New York or U.S. Bank for their corporate trust departments. And they hold the money until we spend it and draw it down. And that concludes my report.
The only thing I just wondered if you might comment on was, as you said, the days to maturity has been decreasing somewhere between 10 and 20 days or so over the last period of 6 or 8 months. I've heard different things about what the Fed might do tomorrow, I guess, maybe half a point. What would be your thought as far as the days to maturity if they do go ahead and make that move to
I think
another decrease?
I'm sorry, Mr. Chair. I think we will try to pretty much maintain the days to maturity in the 550 to 600 day range, which, as you know, is somewhere between a year and a half and a little less than 2 years. What we're looking for primarily these days are what we call LAIF substitutes. You know, we use the state of California's local agency investment fund for our overnight money management. We have found of late that as yields in LAIF are declining, and they are, that we can find paper in the market, federal government agency paper that is in the 3 to 6 to 9 month maturity category, that is offering better yields than LAIF. And as you know, LAIF we measure as a 1 day maturity, and so changes in our LAIF balance can have an inordinate effect on our overall days to maturity. So if we can draw down our LAIF balances over the next month to 6 weeks and find some of this short-term paper to substitute for LAIF, you will see the days to maturity stabilize or even increase slightly as the LAIF balance falls.
Yeah. Okay. Ms. Falcone?
Thank you, Mr. Chair. This is more of a clarification for the watching audience and others. People have heard an inordinate amount of bad news about Fannie Mae and Freddie Mac, and so the F in both of those stands for federal. When we see federal home loans, and there are a lot of home loan bank and so, if you could explain, because I know that there are some transactions that we do have that may give people some concern. But if you could make a clarification for us on why what they're hearing in terms of those two entities in particular being taken into conservatorship under the federal government, and why it's still okay for us to continue to do business the way we've been doing, and the distinctions between those.
Certainly, Mr. Chair, Councilmember Falcone. There really are 4 entities in which we invest that are referred to collectively as GSEs, or government-sponsored enterprises. There's the two that you mentioned that we've heard so much about, Fannie Mae and Freddie Mac. There's also the Federal Home Loan Bank and the Federal Farm Credit Bank. Those last two you haven't heard much about, if anything, because really they have not faced the same sorts of difficulties that have been apparent with Fannie Mae and Freddie Mac. I will say that we do, as you know, we own a number of Fannie Mae and Freddie Mac securities, and even before this crisis, there was always the assumption in the marketplace that as government-sponsored enterprises, that their debt carried the bonds that they issue. Now, we're not talking about mortgage bonds or mortgage-backed bonds specifically. We're talking about the bonds that are issued by Fannie Mae and Freddie Mac to fund their mortgage operations. But their debt of Fannie Mae and Freddie Mac, they're not some exotic derivative mortgage security. There was always the assumption that those securities were backed with an implicit guarantee of the federal government. When the federal government essentially took them over, the assumption was that then became, it really converted the implicit guarantee to an explicit guarantee. And so the feeling was that one of the advantages of the federal government taking over Fannie Mae and Freddie Mac was that it would help them continue to go to the bond market to borrow money to fund their mortgage operations, because now the federal government was essentially guaranteeing their debt explicitly. I will say that I think, in my opinion, unfortunately, in the last week or 10 days, representatives of the administration, the Bush administration, Treasury Secretary Paulson, and other Treasury Department spokespeople have indicated that nobody should assume that Fannie Mae and Freddie Mac securities are backed by the, quote, full faith and credit of the U.S. government, which to my mind is a backing away of the commitment that they made to try to loosen up the credit market. Having said that, I don't think anybody believes that that the government would be able to let the debt of Fannie Mae or Freddie Mac go into default simply because of the implications that would present for the domestic mortgage market, which, as we know, is already under major duress. So I'm comfortable that even Fannie Mae and Freddie Mac continue to be solid investments. Federal Farm Credit, as I mentioned, and the Federal Home Loan Bank have not received any of the attention, and again, because there apparently is nothing to be worried about with them. You will notice from our purchases during the month of September that the two purchases that we made of government-sponsored enterprise fund debt were both Federal Home Loan Bank.
Right, and that therein lies the crux of my inquiry,
Right.
and that people are seeing that we're still doing business with Federal Home Loan Bank, but I wanted the clarification that that's not, because nobody knows what Fannie Mae and Freddie Mac are acronyms for. And so it's very important that we make this distinction, we make this clarification.
Right.
And I'm glad you went into the rest of the story, if you will, with regard to the current conditions of Fannie Mae and Freddie Mac, and that we as government entities holding those securities are, for all intents and purposes, secure, unless they really pull out, and then there's going to be a whole lot of other things that happen. But they won't. They're not going to. They
Absolutely.
can't.
That's correct. And I will point out that although we've made I won't say that I've made a formal decision to this effect, but you'll note that during the month of September, for example, we did not buy any additional Fannie Mae or Freddie Mac debt.
Yes, thank you for pointing that out, because that did not go unnoticed by me.
Right.
I did notice it.
We bought Federal Home Loan Bank
Right.
debt.
Okay.
And while I don't think that I'm ruling out the future purchase of Fannie Mae and Freddie Mac securities, to me, if I can get the same basic yield by buying Federal Home Loan Bank securities as opposed to Fannie Mae or Freddie Mac, certainly that's the way we would choose to go.
Great. Thank you. Thank you, Mr. Chair.
Would you like a motion to accept and recommend this to council?
I would like that.
Is there such a motion?
There is.
Is there a second? All in favor, please say aye.
Aye.
Motion carries. Thank you, everybody. Now, the next item is the contract for design services for the proposed Emergency Operations Center at Fire Station Number 1. I see Chief Ron Prince is at the microphone, and so I assume you're going to be leading us off on this, Ron.
Yes, thank you, Mr. Chair.
Please go ahead.
Thank you. members of the committee. I appreciate the opportunity to talk about this proposal we have before you today. And I know you've got a staff report that covers this, but what we thought we would do is hand out just a brief summary of the highlights of that staff report that we'll use as talking points today. As you know, we have a project underway right now, the Fire Station #1 project, which is pretty substantial remodel for the nearly 50-year-old building, and we're about a quarter or a third of the way through that project at 121 West Carrillo. Now, what today's proposal is to consider adding to that project a concept that was talked about almost 2 years ago, which was to consider putting an emergency operating center at that facility. Now, just by way of background, you know that we've spent a lot of emphasis this last 3 years on emergency management and disaster preparedness in the city. The council approved transferring the Office of Emergency Services to the fire department and actually authorized the hiring of an emergency services manager for the first time, having a full-time position. So there's been a lot of emphasis on planning and training and public information in the last several years. And in light of the major fires that we've had in the last few years, as well as a lot of exercises and training and drills that we've had at the city's emergency operating center, it's played up the need for a more robust emergency operating center. It's clear that the small facility that we use in the basement of the police department is not only too small for our operation, but it also is not well equipped. So as long ago as 2 years ago, when we started the design of the Station 1 project, we contemplated having an emergency operating center and a classroom be incorporated into that basic design. But as the project cost escalated, we decided to pull that aspect of the project out and did not move forward with the final design that included the emergency operating center. Well, luckily, due to a favorable bidding climate, that project came in almost $2.5 million under budget. And so, the window of opportunity may be opening to consider adding a little bit back into that project based on that favorable bidding climate. As you know, the construction of Station 1, the entire project is scheduled for completion by next summer, but we still have an opportunity to think about going back to Plan A, which was to consider having that emergency operating center there at Station 1. Now, as I mentioned, we have had some experience with the drills, several drills over the last few years, and it's amplified. As recently as just a month and a half ago, it's amplified the need to really think about having a more robust emergency operating center. And during the budget hearings we had last spring, I mentioned something that had just come up to our attention, which was the possibility of participating with the county with a joint emergency operating center. They're planning to build a brand new facility. And I spent about 2 months working with county staff to see what that opportunity really was, what it would mean to the city. The location is actually over on Cathedral Oaks that they're planning to build that facility there. And we worked on design ideas, what the city's needs were, space needs, and so forth. But when it was all distilled down after about 2 months of discussions, clearly the county needed about $2.3 million from the city to actually participate in the construction of that facility. And the project costs are estimated to be about $800 a square foot. So it's a very robust building. It meets all the seismic requirements, but it is just a very big price tag for us to consider for a facility that we'd probably use about 4 or 5 times a year during either activations or drills. Not to mention the fact that we wouldn't actually have ownership of that building either. So it was a complicated process, but it daylighted several things for us. It gave us a chance to really think about what our EOC needs were. And I think it's not going to minimize the fact that we're still going to work closely with the county on a bunch of emergency management projects. But the opportunity that we thought existed to participate with the county really didn't play out as well as we had hoped. I was hoping for something like I could come back to the council and say this is what we would need to pay for rent, but it ended up being cash for construction. So we looked at other city facilities as well. We looked right now, actually, the airport administration building is being used as an alternate EOC. We have it set up so if we do have a disaster and we can't use the police department building for whatever reason, we actually have contingency plans for the airport administration to be used, but it's small and it doesn't really meet any of the the infrastructure requirements that we would normally associate with a primary emergency operating center. We also considered the Faulkner Gallery and the Louise Davis Center. The city building official looked at those, and he was concerned about their seismic stability, so we would want to have a seismic evaluation of both those buildings, as well as have to create some dedicated storage space and install large emergency power generators, which have been running around $180,000 to $250,000, depending on the size. Very expensive for a large building. So with that, looking at those options, we went back to Plan A just in the last few months. We thought about would it make sense to go back to the council and see about designing the Emergency Operating Center to final design and come up with a hard and fast number that we could look at, a budget, and hopefully in about 60 days we could come back to the council after we do the design and see if it's something that we could afford to do and are interested in doing. It is a narrow window of opportunity because we are, like I mentioned, right in the middle of construction, and we've got just a few months to make the decision if we really want to go forward with this and keep this current schedule on track and have sort of a seamless transition with the existing contractor. The exciting thing about using Station 1 for the Emergency Operating Center is that it's going to not only be retrofitted, and they're doing the work right now for what's called an essential facility. It'll meet all those seismic requirements. It's the most robust construction you can have to deal with earthquakes. It's also going to be fully sprinkled, fire sprinkler, fire alarm system. It's going to have a very large, robust generator, and it also will be fully compliant with ADA access issues. So it's really it would actually set up perfectly for this. It's not only the space would be twice as big as what we have now. It's estimated we'd have about 1,750 square feet for EOC, and also 2 breakout rooms that could be used for the policy group during activations and drills. So the layout of the downstairs of Station 1 really does lend itself well to this purpose. So what we're asking the Finance Committee to consider today is to consider a recommendation to go back to council later this afternoon, actually, that would give us $35,000 for design services, which includes internal and external design. And it would give us the chance to actually have documents that we could give to the current contractor and get a real tight bid on what it would take to take out a wall and move the air conditioning around and make the adjustments we'd make to the current plan that would accommodate an EOC for the future. So we're not asking for any commitment today other than the design, which is $35,000. And we do think that if we move quickly on this, we might be able to save money. We're looking at an conservative estimate of about $200 a square foot for the remodel, this aspect of the remodel. Compare that to the county's proposal project cost of about $800 a square foot. So it seems like we're on the right track in terms of getting a lower cost, yet, in my view, equally robust emergency operating center opportunity for the city. It also would include a classroom that would hold up to 42 people. That's what it would be used for about 95% of the time. But it doubles perfectly as an EOC.
I think we all have questions for you, so we'll start with the mayor and then go to Ms. Falcone.
I have a couple questions. With this classroom, there's room inside the building. I mean, we already had a design for our Station 1, so are you going to be changing the design? I'm not quite clear.
Just slightly.
Okay.
Mayor, what the plan was is to keep the existing classroom, which held about 25 people, and you've been in there before, and you know what that space looks like. The plan would be to remove the wall between the existing classroom and where the kitchen and day room is now, and that actually over doubles that space. So we're a matter of taking out the wall, but it also includes bringing in a lot of fiber optics and some infrastructure that would support the emergency operating center, as well as a projector and some other things. So it's a slight redesign. I say slight, but it involves electrical contractors, HVAC, all the other disciplines that go along with that.
Mr. Pearson, did you want to leap in there?
Oh, yeah.
Well, I just wanted, it can actually wait till the mayor's questions are over, but I did want to talk a little bit about the funding recommendation. The funding recommendation for this design contract is a recommendation that it be funded from the redevelopment agency's project contingency account. And as the chief mentioned, the design cost is fairly nominal, but staff would also recommend that if the design comes back and working with the contractor, we determine that the costs are in line with our expectations, we would also be recommending to the Finance Committee and the Council and Agency Board that that the actual additional construction cost of somewhat estimated $250 or
350
around
for-
there, also $350. Sorry, yeah, with that also be funded from the redevelopment agency's project contingency account, and the report does include some brief information on the balance of that account and the status of the RDA. And as you know, I hope you'll recall that staff is planning to come back to the Council and Agency Board very soon with an update now that the state's at least adopted a budget that is in place, although they may be revisiting it, with an update on the overall redevelopment agency funding, financing, availability of funds picture for you. But I think we feel comfortable in saying, at least at this point, that given the, I don't want to overstate it, but the relatively nominal amounts involved here, that that we at least proceed with the design. And then when we know what the actual cost would be, of course, we'd have to come back to council for an approval of the amendment to the contract, the Station 1 remodel contract, to accomplish this. And at that time, the recommendation would be that it be funded from the redevelopment agency's project contingency account. That's all I wanted to add, sir.
Madam Mayor,
Just
did you have
follow up-
another?
Yeah, just to follow up on that then. So legally, we don't have to go out to bid for something else, I mean, for another contract or anything like that. We'll work with the contractor that we have right now.
That's correct.
And just amend the contract.
That's
Is that
correct.
what you're saying?
Yes.
Okay.
Like a change
That
order.
makes sense, yeah. But it's,
Change of scope.
I guess, yeah, okay. It's a huge change to us because we're adding an EOC. But to them, it's just making a larger room and...
Right. And in the scope of the size
Yeah.
of the contract,
Yeah.
it really isn't that. I mean, it's bigger than a normal change order, mind
Yeah,
you, but
that's what I'm-
but it's not like the tail wagging the dog
Yeah.
in the sense that all of a sudden this is going to be, 100% more than
Yeah.
the original contract.
Yeah. Okay, thank
Ms.
you.
Falcone.
Thank you. But it's bigger than a bread box,
Indeed, it is.
as they used to say. Just to make sure that the numbers are very clear, let me start off by saying I'm fundamentally disappointed that we couldn't get an agreement with the county. I think that not only would it behoove the various jurisdictions to work together, especially in times of emergency, but I think the people on some extent expect it. However, that being said, if we can do an EOC that will, of course, coordinate with any other emergency operations that are being handled in the area, be it the county. I understand Goleta is not coupling with the county. They're not partnering with the county either on this. So everybody is still all remaining separate, which is too bad. But I guess at this point it's driven by the dollars. I would hope that would be the only reason. $2.3 million for an investment in this, when we can do it for $350,000, seems to be a no-brainer. And so I understand staff's recommendation. As I said, I remain fundamentally disappointed we couldn't work with the county. However, that being said, I think it's really important, as Mr. Pearson pointed out, that the money that we're talking about, although nominal in the scheme of $6,670,000, which with this addition will bring it up to 6.9, let's round it off to $7 million, out of the RDA is a huge chunk of change. Now, fire station is fundamentally important to everything. I have no qualms about that. And of course, public safety is always is my highest concern. But it does mean that there's less money in the RDA contingency fund, and people have to recognize, and you notice in you make note in your staff report, at least under item 2, it's not actually in the item 15 that we have in our main agenda. But main priorities, and we've already agreed to fund the police locker room remodel, which is substantial. Mission Creek flood control channel is also incredibly important to everybody. The Carrillo Rec Center has been on the boards for 15 years, and we should finish it finally. Community Arts Workshop, there's De La Guerra Plaza, but We'll see about that. And then there's West Beach, which is going to be under construction very soon. But these are very substantial projects, and that does not leave room for any of the other things that we might want to do as a community. So I think that I'm willing to put the priority here. However, it does mean that something down the road may have to give, because $7 million is a large amount of money, and I hope we can get it all done for that, although something tells me that's probably not the case. But I'll wait and hear down the road on that. Thank you, Mr. Chair. It's not really a question, just some comments.
I have a question, and maybe it's a comment. Do you know what the county will do with the assumption that Goleta and Santa Barbara won't be joining, and then I guess that leads to, do you think they will go ahead and build a facility anyway? And if they do, will we be involved in some sort of a lease or rental sharing agreement with them at any rate on downstream in 2, 3, 5 years, no matter what we do here today?
Well, Mr. Chair, right now the county is under design for a $7.2 million emergency operating center. It's about 9,200 square feet. They are moving forward with their project. It remains to be seen once they bid that project if they're going to get the votes, frankly, to actually award the contract, because it's there wasn't unanimous support for it initially, and so we'll have to see that if they do move forward with their plans to actually construct it. It would be absent about probably 2,000 to 2,200 square feet that we were otherwise going to add to the building. So to in the future consider trying to rent or lease space from them in that building probably wouldn't work. However, they have a footprint option for the future to consider use by the Forest Service, by Goleta and us. They actually have a place and a strategy that they showed us that would be building a structure over the top of a parking lot that would physically add on to that existing building. So the expansion capabilities are there. They have the square footage for it. They'll be bringing in the infrastructure for it. But so it's not, the door wouldn't be slammed shut, but it would be meaning adding to a building that was pretty much completely finished. And
just to continue on that vein for a second, if we were to have a repeat of the fire event that we had recently, is that where everybody would gather, including us, if that building was in existence?
Well, if the wind changed directions and the Gap Fire was moving into the city, absolutely, we would be using the emergency operating center actively, and it would be what would be considered a level 3 activation, which was 25 to 30 staff there trying to organize logistics and evacuation. And but again, it would have, the reason it wasn't activated at the level 3 is because the county had their emergency operating center open, and the wind pretty much kept it out of the city limits. But that's the type of emergency, though, where you would use an emergency operating center if the city residents were threatened.
Ms. Falcone?
I have a follow-up to that, because I don't really think that got to what Mr. Horton was saying, and I just wanted to put it in a slightly different way. If the Gap Fire or some other event were to happen, Zaka Fire started coming over the hill, whatever it happened to be, or we had an earthquake or a flood or any of these things that affected the region, what I thought Mr. Horton was trying to get to, but is going to be my question, is the county emergency center opens up to deal with the event, and the other jurisdictions that don't have EOCs will load into that particular operation. However, in that we will have our own EOC, and let's say the people of the city of Santa Barbara itself is threatened, we will be staffing our EOC in Fire Station 1, not combining with the EOC at the county level, whatever that ends up looking like. Is that correct?
Well, I can add something to that to make it as correct as I can make it. And right now, anytime that any jurisdiction opens up their emergency operating center, whether it be Carpinteria or us, the county automatically opens up their emergency operating center, even if it's an isolated disaster within a given city. There are pipeline for resources statewide. So if we open up our EOC, they're actually mandated to open up their EOC.
Okay.
What the plan would be, though, is if it was a regional disaster, not only would we open up our EOC, but we would always send a liaison to the county's EOC to make sure that our resource requests get properly handled and dealt with. So we always have a relationship with the county operational area, whether it be one person or a half a dozen people. They have spots for us there. But in the case of the Gap Fire, it was the Los Padres National Forest, and it was in the county. And
So just to be clear, the county is the conduit to which we get state funding, federal funding, the DC-10, for instance, all of those various firefighters that came in during the Gap Fire. We saw at Earl Warren. They come to us through the county operations, even if it's a city emergency.
Yeah, that's correct. All of our resources. And for firefighting, if it was just a fire, we have one other mutual aid aspect that we can order directly from either OES, state OES, but a lot of times if it's just the Los Padres National Forest, we'll deal directly with them. But yes, any of your major disasters, whether it be flood or earthquake, we have to go through the county, and that's how we get all of our resources.
I think that helps to clarify. Thank you.
You also explained that the deleted also had just
That's correct. They do have physical space allocated for EOCs. At Carpinteria in particular, they're looking for an emergency generator for theirs right now, as a matter of fact. But yeah, they would activate their EOCs in a regional disaster if their boundaries were being threatened in any way. And so they do have plans very similar to ours to activate their EOC, but they would either through faxes, telephone, or by physical person, they would have a presence at the county EOC.
Right. Well, the people are concerned about coordination and immediacy of response. And so as long as that exists, even though we're all operating in physically separate locations, then that needs to be, people need to feel safe with that. So that was the point. Thanks.
Okay.
Madam Mayor?
I just have one more little question. We have a contingency of $4,000 on a $26,000 amount for the design. Normally it's about 10%, and so this is over 15%. Is that, it's not a lot of money, but...
For a remodel and getting in there, kind of...
No, sorry.
Since this is a renovation project and we're getting into some unknown territories, we did add a little bit of, we went beyond the standard 10% on that.
Okay.
Just in case.
Just because we don't really know what we're getting to.
Yeah, we don't know exactly what we're getting into.
Okay, thanks. Good.
All right. Well, if there's no further questions from the committee, do we have a motion today?
We have a motion to refer this to the City Council this afternoon?
Yeah. Is that a motion?
Yes.
Is there a second?
Second.
All those in favor, please say aye.
Aye.
Aye. Motion carries. Thank Chief Prince and everyone that came today.
Thank you very much.
And is that
See you
the
this afternoon.
completion of our business?
It is, sir.
Then I will adjourn the meeting.
Thank you very much.